Bitcoin's here to stay. Digital currencies are here to stay. We're not going to try and compete with them.
So the gap, the real problem is the gap.
I'm seeing is that we're moving towards something called the insolvency.
The problem isn't the pandemic. The problem is our economic system.
But over the next 6 months, even if there's negative interest rates, it's not the end of the world. First was the liquidation phase, which is what we saw going into March and finishing in kind of March, April. That's when everything is a correlation of one and everything collapses. Then after that, typically in a recession or a bear market, you have what's known as the hope phase, and particularly because of this, the virus and how that was going to evolve, the hope phase is the period when everyone thinks, actually, it's not going to be that bad. It's okay. And in some bear markets, that tends to last about 3 months. In most cases, bizarrely enough, whether it was the Nikkei 1990 or the S&P 2000 or the S&P 2008, it was a March low and a June high. There are other versions, 1929 being the main example, where it went on for 6 months. So that would take us into August. So those were the two theories I was playing with, that the markets would start to top out as reality sunk. Now, the difference of the reality that I'm seeing is that we're moving towards something called the insolvency. So when you talk about where am I on 1 to 10, so I've gone from 10 back up to 5 as we had the hope phase, and I'm now starting to go with back down again as I start to see the narrative pick up that the economy is not going to recover for a lot longer than we expect. There's no stimulus around, and we've got more problems to come in Europe, the US, and elsewhere. And businesses don't have enough cash flow. They're closing in droves, and that's what I call the insolvency phase. That has been an ongoing narrative. I've been involved in Bitcoin since, I don't know, 2012. It's been the ongoing narrative of, at the beginning of this, I knew the only answer would be cut all interest rates to zero and probably negative, and then massive stimulus beyond anything which we've ever seen before. So the first phase, I wanted to be involved in Bitcoin, so I bought into the sell-off, added to my positions, and now I'm starting to see the shift towards insolvencies, and the only answer is more from the central banks. So that's why I've started to buy more and more Bitcoin. Technically, the setup's right. Obviously, we had the halving, and just the adoption phase, what's happening with the institutions, it's like the perfect timing. Probably above 50% now. Really, I've reduced cash, put that into Bitcoin. My trading positions are relatively small because I don't think there's as much opportunity as there is in Bitcoin. So really, mainly a bit of cash, some gold and Bitcoin. And I'm even toying with the idea of selling my gold to buy Bitcoin, more Bitcoin.
Wow.
Even if they have negative 5% interest rates and they'll lose 5% in a year, it doesn't bother me in the kind of time horizon we're talking. If I'm talking about 10-year time horizon, of course I care. But over the next 6 months, even if there's negative interest rates, it's not the end of the world. And I am and remain so, and I don't dislike gold. But when you get to the macro opportunity, when it's all happening, if Bitcoin starts breaking out of these patterns that it's been forming, it is going to massively outperform gold. I'm 100% sure of that. So in which case, why would I have the gold allocation? For sure, it's all got to come in waves, right? It started with retail. It's started to move into hedge funds. We're not there yet. You can't prime broke Bitcoin assets, but that's coming. We're starting to see family offices in the space. Next is the institutions, the endowments, the pension plans. And within that, you'll find some government, it'll be somebody like Nicaragua or somebody will suddenly say, we've allocated 5% to Bitcoin. Somebody who's always had problems with currency devaluation. That's going to come, and it's going to be another huge story, much like the Michael Saylor story, that will come out of nowhere and everyone's going to go, huh, that's just changed the world again. I know that I've got 50% downside or so, and that's okay for me because the upside's so much bigger. I think that's about right. And that, whether it's 5 years, 6 years, we're going to go through 2 of these halving cycles. And just from what I know from all of the institutions, all of the people I speak to, there is an enormous wall of money coming into this. It's an enormous wall of money. Just the pipes aren't there to allow people to do it yet. And that's coming, but it's on everybody's radar screen, and there's a lot of smart people working on it. So I think it's going to be not because the world's collapsing, it's because there's going to be adoption by the real large pools of capital. People don't trust the financial industry and the financial media. It kind of let them down. And so we're seeing this broad spread. Bitcoin is part of this whole movement, this disintermediation, disaggregation of information, where people are taking their own power back to educate themselves, to say, enough's enough, I need to do this myself, I need to understand what's going on. And that's so good. Okay, so if you're looking in terms of markets, then just watch the price of, let's say, the regional banks ETF, KRE in the US. That'll give you a good idea of what's going on with this solvency situation where people are looking towards going bankrupt. Also, just be cautious. Right now, keeping hold of your income is the single most important thing you can do. And it's not the time to take necessarily big bets. It's all good and great to hear me talking about my big bet in Bitcoin.
Right.
But diverse income streams, protect your income. It's worth more than capital. Protect that. And then if you can take some bets, that's okay.
I think the problem isn't the pandemic. The problem is our economic system. And as most of you guys know, on September 17th, 2019, there was a crash in the repo market of the shadow banking system. And then voila, COVID appears in December of 2019. So I was always a little suspicious of it. I'm not saying it's not real, but it was a little too convenient. Something's fishy, and that's kind of my suspicious mind saying there. Well, I don't want to get hard, but happy days are here again, because I hate to say this, but gold, silver, and Bitcoin are investments of disaster. If everything was perfect, you don't need gold, silver, and Bitcoin. So I've been collecting silver since I was in 1964, when I found out that silver tinge upon my little dimes and nickels and then dimes and quarters. And I started buying gold in 1972. My first coin was in 1972 was in Hong Kong. I bought a Kruger in. And the reason is I understood what happened when Nixon took the dollar off the gold standard. And so, as you know, most of the pessimist gold guys like me just know you just can't keep printing money. And so this COVID thing is a little suspicious. Last night on Tucker Carlson, a female virologist came on and she had to escape from Wuhan. She says it's manufactured. My doctor says the same thing. So there's things about it that don't make sense. I'm not a doctor of virologist, but the people I know said there's something fishy about it. I think they have to, because the vaccines have to make a lot of money. That was in 1986, 1987, when all contingent liabilities for vaccine was removed. So they don't have to test them. Those vaccines can kill you, and the big pharma will never be sued, never. So it's big business, and that's what I suspect it could be also. The gap between rich and poor, as you know, is growing. And then when that PPP and all of the social programs giving people money, people are now would rather stay at home and get paid. I mean, who wouldn't? But and anyway, and people hate Trump a lot. I mean, I've never been political, but Trump is my friend. We wrote 2 books together. And we're both concerned about financial education. So the gap, the real problem is the gap that this coronavirus exposed is massive, massive. I wrote another book, it came out in January 2020, was Who Stole My Pension?
Yeah.
And many people know that Wall Street, the shadow banking system, the Treasury, and the Fed have been sucking cash out of pensions. So the old guys like me, we're in trouble. The boomers are in trouble. So a lot of the pensions are empty. So will there be social unrest? The old guys might be too old to protest, but their kids might if the parents move in with them. Been critical of education. There's no financial education in schools. That's why Trump and I got together. We're not politicians, but we're both capitalists, and we want to teach people who want to be capitalists about money. And my poor dad, who was a good guy, school administrator, PhD from Stanford, Northwestern, and University of Chicago, they're hardcore socialists. And so I fought in Vietnam twice. I came back, I got spat on, eggs thrown at me, and all this stuff. And I know a lot of those hippies became school teachers. So that's what they're teaching their kids. So I'm tenuous around education and school teachers because they have a tremendous influence on young people. It looks like the Buffett is saying the banks aren't going to make it. Because what happens every single time is when the Fed and the Treasury take over, they don't need commercial banks. They want to go straight from the Treasury to the people, which is PPP, Universal Basic Income, UBI, and MMT. So the Fed is now becoming the banker for the people also. That's centrally controlled economy. In July, the deficit was 86 billion. In 2008, the deficit for the Fed was, I think, 800 billion or something like that. And now in 1 month, the US runs a deficit of 86 billion, whatever. The numbers are so staggering that, and we're insolvent. The US is insolvent. So that's why I tweeted, I said, when the vaccine appears and happy days are here again, the real problem has always been the economy. It's been the central bank, the repo market, Wall Street, and US Treasury.
Yeah, so I've read through the ECB papers, the IMF papers, the BIS papers, the Fed papers, and the Bank of England's papers, and they all say the same thing, essentially, is Bitcoin's here to stay, digital currencies are here to stay, we're not going to try and compete with them, but we're going to create a digital world. So they are regulating everything, putting it into place that this is a legitimate part of the system. So they bring in the central bank digital currencies in, and it all becomes interoperable. So it all connects with each other. So it doesn't look in any way, shape, or form that they want to ban them, stop them. They understand the technology is out of the bottle. The genie's out of the bottle. There's nothing you can do about it. It's not going away, and it's too small to matter still. So I think Bitcoin plays a role, and I think as a person, it plays a role as the world's most pristine kind of reserve asset for individuals, corporations, pension funds. It's an incredible asset because it's the only one with a limited supply with growing demand. So it's like Metcalfe's law in a currency. It's an extraordinary thing. So I think that's ongoing. And in terms of the other cryptocurrencies, don't forget, they all play a different role in this ecosystem. This is not a currency game. This is an entirely new way of finance and trusted ownership digitally. This is the internet of money. So there's going to be lots of different platforms, lots of different ways of doing things, much like we have the Apple iOS and the Google Android system and all of these things that all speak to each other and we don't even notice. Right, so that connection of all of these systems is coming, and the central bank digital currency route is going to be the platform by which they can all connect in terms of ease of use and on-ramps and off-ramps into our normal lives. Stimulus, both in Europe and in the US. So we've got this dead patch, and we can see the real-time economic data in Europe rolling over, and I think the US will follow suit. So we have the rise of the virus, which is creating that problem again. So we have all of these factors affecting it, this insolvency phase. So the only answer we have is either more monetary or more fiscal stimulus. More monetary from here means, just as the UK just did, going negative. In terms of more fiscal, it means that the governments will launch big fiscal packages and the central bank will try and monetize it to help the bond markets. So what it means is more printing of currency, and that's not just the US, it's basically every single country on earth is doing the same thing. And that's driving down the relative value of fiat currency overall. It's not just a dollar story or a euro story or a pound story, it's the whole lot.